And I think it could happen in 2026. I'm not worried about it as a different statement. We'll deal with it. We'll serve our clients. We'll navigate through it. A lot of us have been through them before. You don't wish it because, certain people get hurt, but...
There's a graph, one simple graph, and it has predicted every single financial catastrophe of the last 50 years. Every single one. 1929, 2001, 2008, COVID crash, all of it. Right now that graph is screaming red, and almost nobody sees it coming. Wall Street sees it. The Federal Reserve sees it. Billionaires see it. That's why they're quietly protecting their money right now while normal people are still partying. But you probably have no idea this graph even exists. That graph is about to change your life. Let me take you back to 1929, before the Great Depression, before the world collapsed. Everyone was rich. The stock market was soaring. People were buying stocks with borrowed money. Life felt infinite. Then something happened that nobody expected. The yield curve inverted. For people who don't know, the yield curve is basically the market's opinion about the future. When it inverts, the market is saying one thing: I don't trust tomorrow. 18 months later, the market crashed 80%. Millions of people lost everything. Fortunes evaporated overnight. Suicide rates skyrocketed. The economy didn't recover for a decade. Fast forward to 2001, the dot-com bubble. Everyone was making fortunes in tech, Yahoo, Amazon. These companies with zero profit were trading for thousands per share. It felt endless. The yield curve inverted again. Within a year, the entire tech sector collapsed. Fortunes disappeared. Companies vanished. People who thought they were billionaires became bankrupt. Then 2008, the financial crisis. This was different. This was the system breaking. Banks were handing out mortgages to people with no jobs. Investment firms were packaging garbage loans into AAA-rated securities. Everyone knew it was insane, but the money was too good to stop. The yield curve inverted. Then Lehman Brothers collapsed in a single day. Out over weeks. In a day. The biggest investment bank in the world just vanished. The government had to print trillions to stop a complete economic meltdown. $3 trillion in household wealth disappeared in months. And here's the thing. Before every single one of these crashes, the yield curve inverted. Before every catastrophe, the signal was always there. People ignored it, and they paid for it. The yield curve inverted in 2023. We're now in late 2025. And you know what? People are saying maybe the signal doesn't work anymore. The market is at all-time highs. Tech is booming. AI is the new gold rush. Everyone's feeling rich again. But here's what those same people said before 2008. The fundamentals are strong. Real estate always goes up. This time is different. Spoiler alert, it wasn't different. And it's not different now. The difference between then and now is one thing. The Federal Reserve is actively holding the system together with artificial life support. They're pumping trillions into the market. They're keeping interest rates low. They're doing everything to prevent the collapse signal from triggering. But here's the reality that nobody wants to admit. You can't stop the signal. You can only delay it. It's like holding someone's head underwater. You can do it for a while, but eventually they have to come up for air. And when they do, they come up gasping. That's what's coming. Right now, there's a time bomb in the system, and it's getting bigger every day. Corporate debt is at an all-time high. $11.8 trillion. And here's the problem. Most of this debt was issued when interest rates were zero. Companies could borrow money for basically free. So they did. They borrowed to buy back their own stock, pay dividends, fund executive bonuses. They didn't invest in their actual business. They spent it on stock manipulation. Now those bonds are maturing, and interest rates are at 18-year highs. That means these companies have to refinance their debt at double, triple, sometimes quadruple what they were paying before. Can every company handle that? No, most of them can't. You know what happens when corporations can't service their debt? They go bankrupt. When they go bankrupt, they fire workers. When millions of workers get fired, the economy contracts. And when the economy contracts, the whole system breaks. This is already happening in slow motion. Regional bank collapses. Layoffs everywhere. Companies giving quiet quitting signals. The signal is already screaming. The yield curve is just saying out loud what's already happening underneath. When you have a $34 trillion federal government debt, plus $11.8 trillion in corporate debt, plus consumer debt, plus unfunded liabilities in Social Security and Medicare, The system is mathematically broken. There's no way out. If the Federal Reserve raises interest rates, corporations collapse faster, unemployment skyrockets, people can't pay mortgages. If the Federal Reserve lowers interest rates, inflation comes roaring back. Your money loses value. Your savings get wiped out through inflation. You can't raise rates. You can't lower rates. It's checkmate. And the yield curve is the market's way of saying, something's got to give. The question isn't if the system breaks. The question is when and how fast. So, when does this actually happen? History tells us, after the yield curve inverts, you have 12 to 18 months before the pressure breaks through. The curve inverted in 2023. We're now 17 months in. That window is closing, fast. And here's what could trigger the collapse. Scenario 1. A major corporation announces bankruptcy. Maybe a Fortune 500 company. Maybe a bank. Once that happens, the market reprices everything overnight. All the corporate bonds that were safe suddenly look risky. Everyone wants out at the same time. Prices crash. Scenario 2. A geopolitical shock. Ukraine escalates. Taiwan becomes a crisis. Middle East explodes. When more risks spike, investors panic. They dump stocks, rush into gold. Markets crater. Scenario 3. Central banks around the world stop buying U.S. treasuries. Right now, China, Japan, and Europe are propping up the U.S. debt market. If they stop buying, borrowing costs explode. The government can't service its debt. Crisis. Scenario 4. Unemployment ticks up. Once unemployment rises above a certain level, the SOM rule triggers. Every time this rule has triggered, a recession followed. And the Fed can't do anything about it without making it worse. Any one of these could be the domino that falls. And when it falls, everything else falls with it. Let's be brutally honest about what this means for your life. Your job. If you work in tech, finance, retail, hospitality, your job is on borrowed time. When corporations start cutting costs, they cut people first, and they cut fast. Your paycheck. Even if you keep your job, your real income is about to drop. Not through pay cuts. Through inflation and cost of living spikes, your money won't buy what it buys today. Your home. If you bought in the last 3 years, your home is worth less than you paid. You're underwater. When the market crashes, home prices fall another 20 to 40%. Suddenly you owe more than the house is worth. Your retirement. If you have money in stocks, and 401s are basically all stocks, you're about to watch it drop 30 to 50% in weeks. Years of savings wiped out in months. Your savings account. If inflation rips again, your cash loses value every single day. The Fed might even introduce financial restrictions, limits on withdrawals, negative interest rates, confiscation measures. This isn't conspiracy theory. This happened in Cyprus, Argentina, Venezuela. When systems break, governments get desperate, and you will not be prepared. Look at what's happening right now. Tech companies are laying off thousands despite record profits. Banks are tightening credit. They're scared. Commercial real estate is collapsing. Unemployment is ticking higher. Consumers are maxing out credit cards. Desperation. Student loan defaults are surging. Delinquencies on auto loans are at 15-year highs. This isn't future prediction. This is current reality. These are the early dominoes falling. And once they start, they accelerate. One default triggers another. One layoff triggers wage pressure. One business closure triggers neighborhood decline. One credit line closure triggers cash flow problems for another business. It's exponential. It feeds itself. By the time people realize it's happening, it's too late to protect themselves. Let me show you why this matters. Venezuela. 2015 looked normal. 2020 looked apocalyptic. 5 years. Complete collapse. Currency worthless. Shortages of basic goods. People eating stray animals. Argentina. 2000 looked fine. 2001 was chaos. Banks locked people's money. Pensions disappeared. People rioted. It took a generation to recover. Zimbabwe. 2000 looked normal. 2008 was hyperinflation at 89 sextillion% annually. The currency literally became worthless. People needed wheelbarrows full of cash to buy bread. These weren't third-world disasters that couldn't happen in America. They happened in middle-income countries that thought they were stable. Just like America thinks it's stable right now. The Federal Reserve's own economists have written internal memos warning about this exact scenario. Central banks around the world are buying gold at 30-year highs. Billionaires are moving money out of U.S. financial institutions. When the insiders move, you should move. But most people don't. They stay parked in stocks, in bonds, in cash, waiting for the crash to be over. By then, it's too late. Here's what we know. The yield curve inverted. Check. Corporate debt is unmanageable. Check. The system is in checkmate. Check. The pressure is building. Check. The early dominoes are falling. Check. The question isn't if this breaks. The question is when you're going to wake up and see it. So, here's the brutal truth. What happens next isn't just a market correction. It's a system restructuring. When financial systems break, governments step in with emergency powers, capital controls, restrictions on cash withdrawals, seizure of retirement accounts, digital currency mandates, new rules on what you can do with your own money. I'm not fear-mongering. I'm describing what literally happened in Cyprus, Greece, Argentina, and Venezuela when their systems broke. The playbook is the same every time. And that's what's coming here. But most people won't be ready. The ones who see it coming are the ones who survive it. The ones who understand the signal. The ones who move before the crowd panics. If you're watching this video, you're already ahead of 99% of people. You know what's coming. You know the signal. What you do with that information is up to you. Subscribe. Because the next video explains exactly what they're going to do when this breaks and how to protect yourself. And turn on notifications, because when this accelerates, it moves fast. By the time you're reading the headlines, it's already too late.